Friday, June 19th, 09:48 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Today is a U.S. federal holiday. Major markets are closed. Futures were open again, normal hours, this Sunday. This past Wednesday, we had a binary event. Here's a scheduled event we all knew about. United States Central Bank, aka Federal Reserve, had the regular schedule FOMC meeting where they meet and vote. The committee meets and votes. It's not one person, it's a committee. The committee voted and they decided to leave the short-term interest rates unchanged. That's the short-term interest rates that are the big banks that are part of the oversight of the Federal Reserve. Not just the big banks, but again, it's the banks lending between each other. They set the policy. Again, the rates are left unchanged. Now that's going against what the President of the United States wants. He wants them to lower the rates. He wants a weaker dollar. So we're going over currencies here. Going to look at the currencies, give you some insight. US dollar index made a new high for the year. That's not the same for currency pairs, US dollar index. The major currencies, we'll look at those and a few other ones, see how they're impacted. The relationship to US central bank and the US dollar is also including US Treasury notes, the short-term US Treasury notes, the one I discuss so often, the 2-year US Treasury note, as well as the 2-year yields. That has a very close relationship to the actions of the central bank, the United States Central Bank. So, since the central bank left rates unchanged, 2-year short-term, 2-year US Treasury yield this past week made a new low for the year. That's leaning more bullish for yields. Yields go higher, interest rates go higher. The short-term relationship also, because the US dollar goes inverse from the notes and bonds. So like I said, the short-term note, new low for the year, the dollar went higher. Commodities are priced in dollars. Often commodities go inverse. Now the statements, the new leadership, again, the new leadership of the central bank that he made after they voted, was talking about the mandate. I'm not going to go over that in detail. But again, what they want to have with the numbers are not in line with what they are. They're higher. Yeah, that's regarding inflation. They're higher. So again, they're doing what they can do. They're limited what they can do. Again, the number is higher than what they want it to be. That's one big reason why they left the rates unchanged instead of lowering. He also verbally said, and it's also in his press release, the central bank, new leadership, they would do everything it takes to get to the number and to keep inflation down. I'll dumb it down. That means if they need to raise the interest rates, they would do that. I showed past days on the CME exchange. Later this year, they expect the rates to go higher. That would have the dollar go higher. That would have the notes and bonds go lower. So first, we're going to do a top down of the US dollar index. Since we're already halfway through the month, look at this 20 years chart. Each candle is a month US dollar index. So currently for the month, we've made a new high for the year. Look at this big green candle. Yep, the dollar low of the year, which took out the lows of last year. We reversed, did some consolidation, new highs, pullbacks, bullish flag pattern here, flagpole, bullish flag, breakout. Yep. So on this time frame, I see this key level here on the upside, higher odds of getting retested. Good for me. I'm in bullish positions of the US dollar index. I'll likely be adding more on the pullbacks. Now we're on the weekly. Look, this was a massive consolidation since last year, went to this year. Bullish pin bar down here, green bullish pin bar. Strong reversal single, nice. Natural pullback. Nice engulfing pattern here. And took off like a rocket ship. Each of these green candles, big, strong green candles, early signs of accumulation. Pullbacks on weakness. And look at that breakout, new high for the year. Nice. Going to update this now. Oops. There we go. Now to add the other information. Since the Fed left rates unchanged and the yields are going higher, and that means higher interest rates for durations across the board on the treasuries, the short term and the long term, there are people, governments, countries, businesses, individuals abroad and stateside that are buying the US treasuries. Well, the ones that are not stateside, they have to take their currency, buy US dollars, which makes more bullish bias US dollar to buy those US treasuries. Yep, it's a domino effect. And some other information. One of the big reasons the crude oil futures are lower since the past Sunday, when the president made the announcement of some kind of agreement that's already fallen through with Iran. That past Sunday, crude oil gap lower Sunday night. That was an unscheduled binary event. So that was just shock and awe. But again, the dollar taking off like a rocket ship helped a lot for the crude oil to go even lower the past few days. Because again, the US dollar is what commodities are priced in. The daily chart. So Friday's candle formed this new high of the year. A bearish pin bar. I'm not buying at the highs. I'm looking for pullbacks. Thursday, sorry, that was Thursday's candle, that bullish pin bar. That was yesterday. And then that green candle here was the day of the Federal Reserve. Nice. This green candle was, I apologize. Yep. So notice again this big green candle here. Again, daily charts, strong candle breakout. Not buying the breakouts, not me. Maybe you do. Nice, strong, bullish breakout of a consolidation. Looking for pullbacks. We had the pullback into a key demand zone. I mentioned the past days and weeks, I was adding more bullish positions to my US dollar. I did more. We had that takeoff like a rocket ship. I was already all in. Yep, I have gains. Nice. Now we're at intraday 4 hour. So actually, let's put this for the past. No, we'll leave this there. So on the far left, see this vertical line? That was the prior FOMC meeting when they left rates unchanged back on April 29th. Now we put this for the past 10 days. Again, this is the 4 hour past 10 days. And here was this vertical line again when the Federal Reserve FOMC meeting left rates unchanged. Look how strong the dollar was during that media press release. Took off like a rocket ship. Overnight, continued going higher and higher. Nice. So there's some key levels on the downside. I'm looking for pullbacks potential, adding to these areas. Well, that's just part of the picture. There are other countries that impact the US dollar. Let's go to those now. Go into what's called pairs. What I just showed you was the index. Pairs is when one currency is paired against another. So we'll look at ones that are paired against the US dollar. The three major currencies in the US dollar, the first being the euro. And I have a friend that asked me, friends in a Southeast Asian country living over there, asked me why their currency is doing poorly, not so strong. I shared with them what they were very upset about. Again, there are many countries that are democracies, but they're not all the same. There are many countries that are not democracies, irrelevant on that point of the currency. It's how big the demand is for your currency. Again, so many businesses use the US dollar abroad. I'll give you an example. South Korea might be manufacturing a product or service and selling that to, let's say, Vietnam. Well, South Korea, those businesses don't necessarily want to get paid in the Vietnamese currency. They require payment in the US dollar because the US dollar is much more stable, safer in their eyes. So Vietnam business or government has to acquire US dollars and then pay Korea businesses in US dollars. And there are some countries that also hold reserve currencies. There are many countries that hold reserve currencies, a variety of reserve currencies. Some might be the dollar, or many of them are the dollar, also the euro, the British pound, ones that have a higher value. Mm-hmm. So again, that's another big thing is so many countries hold reserve currencies of US dollar, and some of them are not allies to the United States. They hate us a lot and use means to harm us, our economy, our living, breathing people. But again, their business needs dealing with individual countries, example, Iran, North Korea, Cuba, Yemen. A lot of them, when they do businesses between each other, they don't want the Chinese yuan. They don't want the Mexican peso. They use US dollars. Yeah, that's very entertaining, isn't it? The enemy still appreciates the US dollar. And they might go through a third party so the US government can't seize that dollar, which are getting kickbacks for using those other ones. Amazing. So here we are with the euro. It's the largest weighted currency in the US dollar index. Mm-hmm. Made a new low for the year. And look at this. Look how small the trading range is. So small. But again, new low for the year. That's a dodgy candle. Dodgy candle means several things. It means indecision, means potential halfway point, potential reversal. We'll see how it plays out. But that prior red candle was a engulfing candle, bearish engulfing candle. So might see a retest inside that red zone for an opportunity to trade bearish. Yeah, look how long it's been up here in this accumulation. No, just kidding. It's in a consolidation. Accumulation, well, big bearish pin bars up here. And again, we might be seeing the further breakdown, lower lows after we have some pullbacks. Japanese yen. New low for the year was made last week. Also, Japan Central Bank. Yep, they also have a central bank. They're also a democracy. Not all democracies are the same, but again, they have a central bank. They raise the yields. That was a shock. And also, short term, there's a little bounce for strengthening their yen. And it's also the second largest currency in the US dollar. They have a lot of economic problems too. So again, their yen against US dollar is bearish. But when you pair them with other currencies, they might be doing less worse. Big concern is we broke this big demand zone, this green zone, broke it. Oh yeah, we also, I need to remove this. We broke the 2024 low. We broke that recently. And now I need to put this for the year. Understand, Japanese central bank, what they're trying to do is really hard for them because so many factors come into account. They have an aging population, putting more demand on their economy. They also are dependent on imports of fossil fuels, crude oil, natural gas, coal. Yes, they have nuclear power too. And again, that has a big demand because they're a big development country. They use a lot of energy to manufacture stuff and to be in modern world. First, North Korea, how many lights they have on at night. Yep. So again, that's difficult for them to do these policies. So typically when they raise yields, people want to look at their bonds to buy. Their rates might be offering better than the US. There's also the credibility, the confidence. Yeah. So there's a new leadership in Japan that took over in the elections of won. We'll see how they work out. Same with Mexico, had one recently too. And second largest currency, US dollar index, Japanese yen. The third largest currency in the US dollar index, the British pound. Wow, look how much better this is doing than the Japanese yen. Yeah. New low for the year. Dodgy candle at the low. And I explained that how that works with just like the euro. So that prior week, big red candle. Yep. Big bearish order block. So we might get a retest of this red candle, opportunity to trade bearish on a retracement. Yeah, so again, we might have the dollar pull back. These other currencies go up. And if you're bullish the dollar, such as I am, I'll be looking buy on these dips on weakness and looking for the opportunity to trade bearish on these other currencies during retracements. So many opportunities in the options, futures, stocks for currencies. Okay, Australian dollar. This one I want to show you. It looks like it's doing a W pattern. Yep, M pattern. This is the left side, the middle of the M, like the elephant trunk, and the right side of the M. Might be bearish. So again, a little dodgy candle, touching this demand zone. So we might see a retracement a little higher up in that inside candle for a further leg down. Again, Australia. I'll show you also Australia, Canada. I don't have on here right now the New Zealand. They're heavily commodity-based countries. As the dollar gets stronger, the commodities such as the metals get weaker. So these countries are big into Australia, New Zealand, Canada, large into the commodities of metals to produce. Again, as those metals go lower, gold, silver, copper, it hurts their economy. Canadian dollar. Oops. Just want to show you Australian dollar. Again, here's a high of the year. The trend is down. Now the Canadian dollar, new low for the year. I explained it just like Australia, New Zealand, some other countries. They're heavily commodity-based in metals. Metals are going lower, commodities, silver, gold going lower, dollar getting stronger. Smaller trading range. This past weekend, we might get a retracement. And the Swiss franc, one of the safe haven currencies. Again, the trend is down. New low for the year, small trading range. Mexican peso, our neighbors to the south. Massive consolidation there, inside candle too. So if you notice several currencies I showed you on the weekly, inside candles plus small trading range. That's a big sign of indecision. The sentiment is undecided there, a lot of people. Yeah, with the currency traders. But there are still a lot of countries, especially China and other ones that are more loyal to China, but they're going to get hammered down the road badly by China. That's all right. It's their own fault. They're taking kickbacks. Yep. A lot of countries are holding less dollars. Again, the evil countries are holding less dollars in reserve. A lot of them also pre-stock gold, more gold in the past several years. Some of them, again, several different currencies. Gold does not pay interest. Gold costs a lot of money to store and secure and transport. It's heavy. So as those countries, such as China, pre-stocks large quantities of gold, that's less money to build their economy, to maintain the stability of the government. How many people do you know going to buy bonds from China, taking their currency, convert it into Chinese yuan, buying Chinese bonds, and have confidence in a communist country that you're going to get your investment back, able to take out of the country? So Mexican peso, again, here's the low of the year, here's the high of the year. Nice. It's forming a bullish flag pattern. So we're going to see if it has a breakout to go higher. Now the US dollar Chinese yuan pair. As this trends down, it's weaker dollar, stronger yuan. So the Chinese yuan made a new low. Sorry, the US dollar made a new low against the Chinese yuan pair. So again, the US dollar index made an all-time new high for the year, because I showed you several of the currencies in there, poor performers. Well, the Chinese yuan is not part of the US dollar index. But here, it's a pair. And again, US dollar made a new low for the year against the Chinese yuan. United States executive branch has tariffs on China. So the US companies are paying additional tax. They pass that tax as higher prices to the customers. And now those companies, they're again buying products, services from China with US dollars, now have to spend more US dollars to provide those products and services, going to raise more prices, more inflation to the US. Shame the President of the United States and the media on the left and right don't explain what I just shared with you. But they certainly will come out to criticize the other political party, but not own up in communications honestly. And there are people loyal to those two political parties. Wow. Each is their own. The point is, tariffs is a tax. You may not see it on your receipt directly, saying a tariff tax on your receipt of purchases when you're American. But if you don't realize the increase of the products you're buying and prices, I'm telling you again, those prices are higher. Embedded costs, transactions such as currencies. Yeah. Other people in other countries are very well with them for years. I understand many higher universities, public school systems, and parents don't know what I just shared with you, nor do the homework. So again, the current situation is the masses, the pawns here are not well aware of what I just shared with you. But you watching this video and hearing this, you're better informed than so many people that have a high college degree on a frame, laminated on the wall. Good job out of you people being here, paying attention. Crypto Bitcoin. Here's the low of the year. Dodgy candle, inside candle. Got a lot of inside candles. Big red candle, bearish, retracement, rejection, bearish pin bar. Yeah, bearish. And crypto, their promise was like a holy grail that it was going to be mainstream usage everywhere. That failed. Many businesses, very different kind of businesses, chose not to use cryptos, not just Bitcoin, other cryptos. Again, the crypto companies charge fees to use their exchanges. A lot of them charge high fees. I don't know if you ever looked at Bitcoin. There's different levels of Bitcoin too. There's Bitcoin. There's two different kind of Bitcoins. There's the original one, and there's the one spun off. Their fees for transactions are huge. So when people complain about a merchant account for Visa, Discover, American Express, those fees, wow, so much smaller. Okay. Now we know the situation with the US dollar, also what the central banks is leaning towards. The leaning towards is less likely to lower rates, maybe again leave them unchanged the next meeting, and again higher odds this year they're going to raise rates. Since you know that, I explained to you the US dollar would go higher. The notes and bonds would go lower. So if you're an investor, swing trader, there's opportunities to make wealth, to make money, to earn income on smart trading decisions, not trading crypto, not trading penny stocks. But again, currencies, most people are not hearing that market it well. And I'm not talking about the Forex. The Forex is an exchange. You could trade currencies on other exchanges. I do not trade currencies in the Forex. I prefer to choose currencies in the futures market, the CME, and other exchanges. You also trade options on them. Thank you, as always, for spending just a little time with me. That's it for the video. Thank you for watching.